So my name is Brian Leni. I write the Junior Stock Review Premium newsletter. Today I'm going to be presenting profits are made on the delta between price and value. So first, an agenda. I'm going to go review the 5 ways I think you can be more successful and consistent in this sector. I'm going to go deeper into the price to value ratio, followed by how do I value exploration companies, and then some company overviews with the 4 presenting companies, and then a little bit about my newsletter. So 5 ways you can be more consistent and successful in this sector. And if you watch my previous 2 Metals Investors Forum presentations, I went into more detail with each point. I'm not going to do that today, but I think that anybody who hasn't seen this, can you go back? That you take a look at these 5 points, especially the first one, self-awareness. It's so important in this sector to be successful. You need to understand what you're looking for, what you know, what you don't know, and how to proceed. That all lays in within you. But today I want to look more at the price to value ratio. So price is basically the market's representation of a company. It's represented by the market cap, and it is that perception. The market cap is the number of shares times the share price. I like to use the fully diluted price whenever I'm doing any analysis on companies. Obviously, the amount of options and warrants that are outstanding on a company matter, and it matters to a senior mining company that would potentially be buying this junior. They are going to take that into account because it's obviously the price they have to pay. So you should too. Some companies, there's a big discrepancy between their regular number of shares and their fully diluted shares. So you need to take that into account. And below you'll see I listed a share price chart for Adventus Metals. And only because I like to see companies list this along with their share structure, because it just lets me see what catalysts they've had over the last year and how that share price has performed. Value. So this is where the investor comes into play. This is your responsibility to find out or interpret how you would value that company and if it's a possible investment. Value is represented by the sum of discounted cash flows over a period of time. For those that don't know how to do a discounted cash flow, that's fine. But I think you need to look at companies that do have a technical report that you can use to find that after-tax NPV, and from there determine how you're going to value it. But for the people that do know how to do discounted cash flow or want to try, I definitely have a couple points that I think you should ponder when you're doing it. So first is the discount rate. You know, we live in a world where interest rates are rising, therefore the cost of capital matters more and more. And especially if you're looking at companies that have projects in more of the far-flung parts of the world, you know, the cost of capital is that much more. So you have to use more than the 5% discount rate that most companies are going to present with. The 5% rate is great for marketing, but for reality, you're probably looking more at 10%, and that's what you need to look at the technical report usually for. I like to use the current metal price. I don't like to be too aggressive. The temptation to use $3,000 gold might feel good, but in reality, it's I think way too aggressive. On the flip side, I also don't think you want to be too conservative and use $1,200 gold, because then, especially these days, a lot of projects don't look that great. So use today's metal price. The other side, if you're trying to look for cost profiles, you're trying to put together your costs for the discounted cash flow model, and you don't know enough to do that, I highly suggest looking for a company that's either completed a technical study or is operating in the sort of immediate vicinity of this project, and use their cost profiles, like what their cost to mine, G&A, all these things, and feed it into your model. The other thing is there's a big difference between a PEA and a feasibility study, and it all has to do with how much work has been put into the study from an engineering perspective. So I use a percentage or a range confidence level to say this is what the value of the company is. Now, these are ranges. It doesn't always stick to this, but this is sort of an outline that you can use in the future. So PEA, 5 to 25%, PFS, 25 to 40, and then a feasibility study, 40 and up. So profits are made on the delta. So the delta really means difference, and this is usually subtraction. But I think it's better seen as a division. So, value divided by price. And you're looking for deltas that are higher than 1. Obviously, the higher the number, the more downside protection you have. And I think as an investor, especially in the resource sector, you have to protect your downside. The upside is going to come from the other things, but you can lose money so easily in this sector. Look to protect your downside. So you find a company that's selling for a discount. Great. There's a bunch of them. Some are actually selling for a discount for good reason, and they'll stay that way into perpetuity, most likely. You want to look for companies with reasons that can be overcome. Lack of promotion, lack of money, the metal price is out of favor. These things can be overcome with time and networking with the right people. On the other side of things, you can have metallurgical issues, you can have permitting issues, you can have social license issues. These things not only take a higher technical acumen to diagnose and say what kind of probability you think has for them to overcome it, but they also, in some cases, just will never be overcome. And these companies, again, will sell for pennies on the dollar of what they're worth. So you need to distinguish between the two. Valuing exploration companies. Exploration companies are basically floating abstractions, in my view. The market caps can be wild. These companies essentially have nothing except for the people and whatever the projects are sort of worth. So it takes a little more thought, I think, to value an exploration company. So this is what I do. I look for comparisons, similar exploration companies, similar target size, similar target metals, and access to cash, and use a comparison between those. Also, another thing I think that a lot of people should think about is comparing that exploration company that, let's say, is looking for 2 million ounces of gold, and compare it to a developer who has 2 million ounces of gold already, that's economic at whatever gold price you want to use, and see what the difference is in that market cap. I know of a number of companies right now that have been successful with their exploration. They have the ounces in the ground, yet the market values the exploration company at the exact same market cap. So it shows you that the market values hope more than reality. And that's opportunity, in my view. And then people involved in the prospectivity of the project. So first, the people. You'll see on the right, these are people that I've made money with over the last few years, and I'm hopeful to make money with in the coming couple of years. You want to look for people that have had success in the past. They're able to explain to you exactly what sort of process they're going to put on the project that they've chosen. It should be pretty clear. You may not understand everything, but the person that you're talking to should be able to explain to you exactly what they're going to do, and a sort of rough timeline of when you should know when certain milestones are hit. And lastly, the technical acumen fits what they're doing. So if they've had success looking for gold deposits undercover in Quebec or Canada, that what they're doing today is basically the same thing. They haven't gone to Africa and looking for nickel or something like that. So that their success is aligned with what they're doing today. Project, good people pick good projects. You get number 1 right, you usually get number 2 right. But from a grassroots level, I think you want to look for projects with 5,000 to 10,000 hectares of land, little to no drilling. So these are really virgin plots of land, good geology, high alteration, big tapping faults, and proximity to other large known mineral systems. Big targets, and I prefer geochemical over geophysical. The geochemical is more real in my view, and I think this is what you want to look for. At the very end there, I talk about reducing your exposure to exploration. It's really risky, and I've got it, it's probably 50-50, but I really like the prospector generator model or the hybrid model, and companies, and you'll see Northland Minerals does an excellent job at it, reduces their risk in the market by JVing projects out there and generating cash and royalties into the future. Now I'll go over the companies that are presenting. Cartier Resources, it's led by Phil Cloutier. This is a highly technical team that's exploring in Quebec. They're technical and frugal. It's a very good combination to have in exploration and development. Their dollars go a long way, and so I have extreme confidence that these guys are going to put their money to work in the right way. Strategic ownership, there's a big position by Agnico Eagle. Agnico Eagle is a big owner of land, and obviously they mine in the Val d'Or region. And they did a deal with O3 Mining last year, which I think is kind of transformative of what it's done to their flagship Chimo project. So why is the company selling at a discount? It's a great question. I think that, obviously it can be applied to probably every company that's presenting here. The depressed gold market, or the market in general, over the last year has kind of hit everybody. Second to that, Cartier in particular, I think had a lack of news flow, which didn't help. But really, I think what the issue was, it goes back to the fall of 2021, where they had some missed drill results at Benoit. And what I really think, though, is this is a way overreaction by the market. Benoit, there was some value there, but there's no way that Benoit was worth more than 50% of Cartier's valuation. And this is really where I think that the big opportunity is because of the market's overreaction. So where's the value? It's in their flagship Chimo project, close to 30,000 hectares in one of the best addresses in Val d'Or. It's proximal to infrastructure, roads, they have a shaft, power, and I think the bigger deal is that they're proximal to these other operating gold mines, which I think is going to be a big deal in the future. The senior gold miners want to be in this region for good reason, the history and what you can see out into the future. And I think Cartier is right at, near the top of that list of potential M&A targets. And of course, they've got over 2 million ounces at Chimo with the goal of reaching 3 million. And we'll hear more about this with Phil. G Mining Ventures. Resource company investing is all about the people. I don't know if any of the companies that I own in my personal portfolio are more people focused than G Mining. The Gignac family has a tremendous history of success in mining, from Louis Sr. building a mid-tier producer that was bought out to G Mining Services, which has built, open pit gold mines across South America and Africa, and now are putting that to work in G Mining Ventures and building Tocantinzinho. The market cap is just over 300 million. At today's metal price, it's worth well over $1 billion Canadian. And they just raised over $500 million from what I would call extremely smart money in the resource sector, La Mancha and Franco-Nevada. You can see in particular, Franco-Nevada has put up quite a bit of money. And to me, this is not only a testament to the project and their confidence in that, but it is a testament to the people. So why are they selling at a discount? Well, the opportunity here, I think, is quite large. They're in that Lassonde curve trough that you see, where people, there's not going to be necessarily any great exploration drill holes. You're going to get updates that are related to, pushing dirt around and what comes to constructing a mine. To most people, it's boring. But if you look at the delta between what they're selling for today and what it's actually worth, and how that will be closed leading up to their gold pour next year, I think it's a tremendous opportunity. The other two reasons, CapEx overrun, I think this is a realistic concern. But again, it goes back to the people. They've done this before, and if anybody's going to do it properly, it's going to be them. Second, Brazil. Brazil is always a question mark, whether it's right or a left-wing government. And considering where G Mining is in their development, they're permitted, funded, it just comes down to execution. So I'm not too concerned about Brazil. And the value, like I've said, is in Tocantinzinho, over $1 billion in after-tax NPV at today's metal price. Kenorland Minerals, again, this is a people-driven company. I remember from the first time I spoke with Zach on the phone, I was like, wow, this is somebody I want to invest with over the long term. Great team of technical guys. They've done so well since their RTO 2 years ago. They've got a market cap around 50 million, working capital position in an enviable position over any junior mining company. And particularly, I think you should pay attention to that income versus G&A. They're a plus 3 million. And every prospector generator or every junior would be or envies this position to be plus in their income versus G&A, but you just don't find it very often. Last year, they had partner-funded exploration of $20 million. And in talking to Zach this morning, it looks like they're going to be closer to 30 million in 2023. Again, a junior that has $30 million worth of exploration exposure, where do you find that? And strategic ownership, high insider ownership, and by the Sumitomo and the high net worths. So why is it selling at a discount? Poor market conditions. I also think prospect generators are wrongly thought of as boring. Now, I think there is a percentage of prospect generators that are boring, and they've kind of had the same story year after year after year. But when you look at the business model and then you find people that are really executing on the right side of this, to me, it's a tremendous business model. It reduces your risk, and you have all this upside potential in the exploration that's being done. If you look at who they're doing deals with, these are all the best senior mining companies in the business, and you don't get better partners than that. And then the last point, the market just doesn't understand it. And that's where I think we are today. If you look at their cash position, or working capital around 20 million bucks, and what they're able to do that with a positive income to G&A, things look very, very good from a downside protection point of view. And the value, it's in the cash and equities. It's in Zach and his team. It's in, they've already made a grassroots discovery with Sumitomo at Frotet. To me, this looks like it has the potential for multi-million ounce, stack vein set, and that could be a company maker in and itself. And the organic royalty generation is a big thing that gets overlooked. Mawson Gold, another great team of people. Ivan and Mike. Mike Hudson last year was the CEO. He's the executive chairman, but he's also moved on to Southern Cross, which they spun out of Mawson earlier last year. Ivan Fairhall has come over. He's an engineer by trade, great technical guy, and good grasp on the markets. And I think the team of people is top notch. By the numbers, they're around 60-ish million market cap. They got a couple $1 million in cash. And they've got their 1 million ounce gold equivalent project in Finland, which sets up a really nice base value proposition, but we'll talk about that in a sec. So why is the company selling at a discount? Again, poor market conditions, but also last year, one of the first things that I had heard around was rumors of Sentient wanting to sell their position in Mawson. And really, it wasn't for anything to do with Mawson. It was for, you remember the market, how bad it was last year. It was based on redemptions. But I think this rumor really capped where Mawson's share price could go. However, what has happened is Southern Cross has really got in the news with a bunch of exceptional drill intercepts, and in the process has directed attention back to Mawson. And really, when Sentient did move out of their position in November, December of last year, that volume was able to be eaten up. And we're talking about millions of shares that were sold, and the share price has still gone up. And I think, I don't know what we closed at yesterday, but maybe 25 or 26 cents. So it was a good win for my subscribers, and of course for the other Mawson shareholders. So where's the value? The baseline value is in Rauschaplat in Finland. It's a gold cobalt deposit. I think that cobalt gets probably overlooked by a lot of people. If this were in production right now, it would be the EU's third largest cobalt mine. And to me, considering the EU's progression towards having a low carbon footprint battery manufacturing industry, I think that's going to be one of the reasons that they get pushed forward first and overcome some of the hurdles that might be associated with permitting in Finland. The upside potential, or maybe the free upside potential, is best how it's coined. They have a 51% position in Southern Cross. That position is worth more than their market cap right now. So they're either getting Finland for free, or they're getting the exploration in Southern Cross for free. And if you do some investigation, you can see some of the hits: 300 meters of 2.5 grams, 119 meters of close to 4 grams. These are big intercepts, and to me hint at a big system. Finally, Junior Stock Review Premium. It's published weekly. It's a direct reflection of how I see the market and where I'm putting my money. Some big winners over the last couple of years. JuniorStockReview.com if you want to know more. Thank you very much.